Hello, fellow traders. 'Tis I, TheRumpledOne. It's Monday, February the 18th, President's Day. The year's 2019. Let's talk trading. How to trade like a pro. Talking like a pro. What do you think I mean when I say talking like a pro? I want you to ponder that for a few seconds. Do you think I mean you're talking using the language, talking, about stochastics or trends or any of that other stuff? No. What I'm talking about is how you talk to yourself inside your head and maybe out loud. Do you yell at the screen? That's not really pro. You might see, that in the movies, but do you really think that's the way the pros operate, the real pros? I think they're more calm, cool, and collected. Do they get mad when they lose and happy when they win? Or is it just business to them? It's kind of like in football. You see some of those guys, they score a touchdown, then they act like idiots. Other guys score a touchdown, they just hand the ball to the ref and go about their business. So I want you to focus on this week. I want you to just pay attention, be mindful how you talk to yourself. Are you really getting upset every time you lose? Are you jumping up and down and fist pumping every time you win? Or you just take it in stride? It's like, no big deal, on to the next trade, right? And money and risk management plays a big part in that. Because if you know that you've got your stop loss set that, you're only going to lose a certain amount, then you pretty much know what the worst thing that can happen is. So there's no reason to be upset. I mean, trading has an element of chance in it. You can prepare, you can study, you can plan, but the fact of the matter is, there's still an element of chance in it. All your research could say that the price should go up or the price should go down. You put the trade on, and then all of a sudden something happens, a news event, unexpected, and what happens to your position? You get stopped out. It's just part of the game. And then when you look back, and maybe you're going to go back and analyze the trade, Monday morning quarterback, that's what a rookie would do. But a pro is going to make sure that before the trade, the I's were dotted, the T's were crossed, and realize that because trading has an element of chance, not every trade's going to turn out to be a winner. It's not going to go the way you wanted it to go. So let's see here. Okay, we've got one gap that hasn't, two gaps that haven't filled. I think last night there was three, so somebody may have taken advantage of that. We're green for the week. We're in the upper weekly wick zone here on the euro yen. And for those of you wondering why I keep showing the same pair over and over, I don't switch back and forth or rarely do it. It's because I want people to realize, especially traders starting out, that you don't have to run from one pair to the other. That one pair will give you more than enough opportunity to make a trade. Profitable trade on a daily basis. You can see here we got near that yearly open, but just not quite. We put in a high for the day and a low for the day. Of course, it could go higher or lower. The day's not over yet. And you can see here, high for the month, low for the month. We're still within that on that first day. It's just that the first 2 days, or the first days of first 2 months, have just been crazy days, hundreds of pips. Not sure why, but it just played out that way. And once again, we are green for the month, but we're still below the open of January. And we are within the range of the first day of the month and the first day of the year. And you can see here, we broke out of that inside bar that was created 15 days ago. Once again. And, that's another thing about pro traders. When you tell yourself what you tell yourself after you lose. I mean, if you think you have to go back and find a new system or new indicator or reinvent this or tweak that, no. You have to look at the statistics over 100 trades, maybe 1,000 trades, to see if there's anything that really needs to be tweaking. I mean, people are asking me what's the best system to trade. And I keep telling them, you just trade horizontal lines. Just trade the cross. I mean, how you pick the horizontal lines could be random, like, the Einstein lines whenever you look. I mean, you can use inside bars, you can use opens, high lows, just whatever. You could use pivots. You can see here only 57 pips and only 3 pairs over 100. But it is a bank holiday here in the U.S. But you see, once again, we did break out of that previous day's high. And there's the weekly, was the highest open. It's the weekly highest open. It's also the daily highest open on the H1. And you see here, you had a second opportunity to take that short. In fact, there's something else how you talk to yourself. I put the trade on this morning when I saw it. And I split it in half. And then when it went past 5 pips, I put a stop at 5 pips. And then I moved the other one up to break even +1. And of course, both my stops got taken out. And then, of course, it went down lower. I mean, do I get mad? Do I yell at the screen? It's just like, you know what? It happens. But what I was thinking about doing was, knowing that sometimes you get wiggled, was the next time I take that 5, and then rather worry about moving the stop up to break even +1, I can move it up to like break even, maybe -4. So the worst case is I make a pip. And in that way, in this particular case, I wouldn't have been wiggled out of that one trade, and I'd be up about twice as much. So it's just something that came to me about, hey, you know what? If you make some, then you've got more you can risk on the other side, rather than you don't really risk more, but you could say, hey, rather than stopping out where price could come hit it and reverse, I could, have that stop loss here that was actually make one trade a loser, but the other trade was a winner. So overall, I either break even or, like I said, net a pip. It's just something to consider. So rather than get angry, I looked at it and I thought about it, and I came up with a way that maybe the next time I trade that, I can try it and see if it works. Maybe it does, maybe it doesn't. But it's just something to consider. So rather than be get mad, be angry because you got wiggled out of a trade. Instead, you've determined what you can do next time to prevent getting wiggled out of the trade. And here we go. Pivot points missed today. We saw that yesterday. One buy zone trigger is right there. And, once again, why do I like the buy zone? It's because the pair has the range, and the range is going to be away from the open. So maybe it goes up, maybe it crosses and goes down. But in either case, it has the range away from the open. That's how we get the range. And you can see here, we got about a 58 pip range at the moment. Rat zone, you can see, put in a high. Red rat trades coming out to pay off. Once again, we missed the pivot. We hit the weekly pivot. Here's the monthly pivot, 122.97. See, we missed today's pivot. We took out yesterday's or Friday's, the previous session's pivot. So now on a red day, I'd be looking to short towards this pivot. So once again, talking like a pro, you look at the screen, you see what it's telling you. Okay, we've got a missed pivot, so you think, okay, the next time I see an opportunity to go short, I'll go for that one, just like here. Next time I see an opportunity to go long, I'll head that way, and that pivot could get taken out. Price action, once again, 3-ball. And here, somebody asked the question, can you use the 3-level ZZ on stocks? I mean, you can use it on any instrument that you trade. I mean, basically, all this is just a 34-bar high. The 1-ball is a 5-bar high or low. This is and then the 2-ball is a 13-bar high or low. It's basically all it is. Once again, we've talked about the wick zone, and you see here just that one opportunity. Only a few pips to the downside. You can see here when price crossed below the peak of the bid, and now we're looking for the bid to cross above the valley of the ask. Einstein line was set from yesterday. You can see sometimes a little, sometimes you can get a lot just on a horizontal line. Okay, monthly frequency distribution range. See, once again, we look at the daily. You can see here our current range is 57, which is only 60% of the average, where the average is 96. But you see here, there might be some room for it to go, but where it is right now, it doesn't look like it. Once again, high open on the frequency distribution, and open to low, how far price moved. You can see here there was no movement off the low, not even an entire pip. There's the open, there's the low. So, fellow traders, remember, talk like a pro. Don't beat yourself up, don't get mad. Just focus, because it's not what you trade, it's how you trade it. So go out there and drain the banks like a pro this week.